Alright, hello and welcome to Camel Finance. I'm your boy Camel, and in the UK, the latest projection is that we will be hitting 18.6% inflation by January. So if we scroll down, I've had this highlighted for you. Citi predicted on Monday that inflation would reach 18.6% in January. So in a mere 4-ish months, we should be at 18.6%. Of course, this is by their Mickey Mouse numbers, so let's call it 40%. 40% real world inflation. They don't mind saying that UK gas prices for next day delivery surged as much as 33%. So you can see this 40% number, it's not hyperbole. We are certainly well above 18.6%. Even if you want to be conservative and say it's 30%, that is still 30% inflation in the UK this year, which is out of control. My interpretation on this is that we are about to see a pivot from the Fed, not just the Fed, but from the Bank of England, from all sorts of people. We're going to see a dovish pivot, and they're going to move to printing in the not too distant future. And I'll show you why. Not only are we seeing inflation get completely out of hand all over the place, but we're seeing the central banks start to hint at moving the goalposts. So we had just 2 weeks ago the Bank of England saying that they were thinking about increasing the figure from 2% to 4% as their target for inflation. 2% is completely unachievable for both the Bank of England and for the Federal Reserve of America. So it's most probable that the Fed is going to follow suit, is going to do something like this, start to move the goalpost probably by the end of the year, if not before. We have Jackson Hole meetings starting tomorrow, concluding on Friday, and we get Jerome Powell from the Fed speaking tomorrow. And so I will be eagerly watching to see if we get signs of a pivot. If you've been watching the channel for a while, you'll know that I have long been calling for a pivot around September time. It seems to me that they are already hinting at this. I have an article here. It says the Fed will issue its final big rate hike next month before pivoting as inflation cools. And this is coming from JP Morgan. So is this a prediction that will turn out to be wildly wrong? Perhaps. They're essentially saying that they expect the Fed to raise one last time in September to the tune of 75 basis points before pivoting to a pause in rate hikes. So I've long been calling for this pivot in September. Do we get it officially announced in September, and then perhaps we see the real pause in hikes come the month after? That seems to be what JP Morgan is letting people know that's going to happen. Maybe this will turn out to be wildly wrong, but to me, this would all make sense because they can't continue to hike rates into a slowing economy. I've been saying this over and over and over again. You know the tune by now. With an overbought RSI read in the short-term risk reward on the S&P looks poor. And so you can see whenever the RSI has been up here in the past, with the exception of the final top before the COVID-19 plunge, this has always been a time where the market has taken a cool-off period. So buying here likely doesn't have the sort of risk-reward that was favourable. I personally believe that there's going to be big opportunity coming up, and I will show you that when we get into the charts. But I think a little bit more patience is required. Hedge funds are not letting up on their short bets. Net futures positions for the S&P 500 continue to plunge and are near the lowest since June 2020. So you can see this, they're not letting up on the short. They think that there's likely more downside, and then they'll start to unwind these near the next daily cycle low. That's what I think. And again, I'll show you this in the charts when we get there. In terms of bear market rallies, the rally is at a crossroad. The S&P has retraced 53% of its total decline, and this is as far as the bear market rallies go. So we've kind of maxed out the potential move if this is a bear market rally. So that means that if the market continues to climb, technically speaking, there will be no historical basis for concluding that this is not a new cyclical bull market. With many investors expecting new lows to come, I actually think the lows are in. I've been saying this for a while, open to being wrong, of course, but for now it does seem to me like the path of most pain is to get a nice deep pullback before a Fed pivot and then a resumption of this secular bull market. The Dixie is screaming higher. Will Clemente says he can't even draw a proper parabola because it looks too ridiculous. This is on a monthly time frame, of course. So kind of crazy. I think it's topped. Again, we'll show you that when we get to the charts. A couple more things I wanted to show you first. With a lot of people convinced that Bitcoin is going to 9K, Root has posted a nice thread here that shows, he said he's seen this chart doing the rounds and he wants to get rid of some of the misconceptions, because this would sort of imply, if we're the pink cycle now, that we've got to drop all the way down to 8 or 9K to complete what would be a normal cycle for Bitcoin. But he says, first, let's zoom out to provide some context from where we're coming from. Two things stick out immediately. One, we really went sideways into the all-time high alignment. And two, we're comparing previous pointy blow off tops to a flat distribution top. And this is a very good point. Everything went up parabolic prior to the last cycle top. We had a distribution flat top, but the last two were parabolic rises. So essentially the point here is, since we didn't go parabolic, do we really need to correct as aggressively? Big 80-90% drawdowns come off the back of parabolic advances, but we didn't have a parabolic advance. We had a flat distribution top. So the argument that we need to drop by an equal amount, that we need to go all the way down 85-90%, like we did when we had prior blow-off tops, doesn't really hold here. This is a nice long thread, and it dispels an awful lot of the myths. I'm not going to cover all of these, so if you want to go and check that out, go and check that out. But the point to make is that we don't necessarily have to go all the way down to 8 or 9k. It does say that we can't rule out further downside, so maybe 13k to the 17k range, as per the April top alignment shown here. So that would be perfectly reasonable. But if you're waiting on the sidelines for 8 or 9k, then in all likeliness, don't get your hopes up for that. Just before we get into the charts, 15% of Indian adults own Bitcoin or crypto, according to a KuCoin survey. That is 115 million people in India alone. This network is growing, and it is growing every single day. So let's get into the charts. The dollar looks to have put in some kind of double top for now. Can it scream higher? My bias is no, it can't. I think that this is likely topped. I think all this is waiting for is some guidance from the Fed tomorrow, something to hint at a pivot or the end of the rate hiking cycles, as I've already mentioned, and then I think we'll see this cool off, and we can call this a true top for the dollar. So obviously that is conducive to risk on rallies all across the board. Of course, for now, that remains to be seen. We have the 10-year yields. I've been pointing at this level here for a long time and saying that we really do not want to breach that. So are we going to get rejected? Again, it all comes down to the Fed, doesn't it really? The Fed can make or break markets, as per Monday's video, but most likely I think we're going to see this pivot, and I think this is going to be conducive to finding some lows in the not too distant future. Quickly cover the S&P for you. The S&P, this was a really good time to exit this trade, so that's great. The same is true of the NASDAQ, and what's interesting is we are currently just below this low here. And why is that important? Why is that significant? Because this is the CPI low. That was a big low, a big level for us to lose. We haven't convincingly broke down from here yet, but this is a true structural breakdown, trendline breakdown here, back below the final line of resistance, as you can see in red, and now taking out that CPI low. So this is structural damage. It could recover for sure, and certainly on a Fed pivot you'd expect that, but does it have to bleed down a bit first? I would think so. The VIX is kind of moving up here. I'm starting to think that it would have exploded if it was going to explode by now, so perhaps this is going to stall. Maybe it's going to form some double bottom and go. Ultimately, I think the S&P is too far away from its daily cycle to call it a daily cycle yet. I don't think it's going to bottom here. I think we've got to get into the first week of September roughly before we can find a cycle low for the S&P. So perhaps that implies a little bounce that fails and then drop down into that cycle low. I don't really foresee new lows on the S&P unless the Fed comes out as hawkish can be. The UKX, we took the profit on this trade, showing relative strength compared to the S&P and the US equities, but we'll see how that goes. It benefits from a strong dollar, so that's fine. Real, if it can show some support at this bottom level, I think we can long this, but I'm going to play a little bit more patient from here. I will make sure to notify you if I end up taking this trade. Oil looks to be attempting to break out. This is quite interesting from oil. A daily close above these two highs here would technically be a new bullish structure for oil, but oil does like to retest before it goes. So I think the long from me would come from a retest, a successful retest of this downward sloping trend line. So if we can break that retest, then I will line the long up from here. All of this will come down to the CPI numbers that are due in a couple of weeks' time. So I think even if it does rally, it's likely going to fail. I will continue to update on this. You could take this trade as a break above this level here, but because I know oil likes to retest, then I don't really favor this as a stop. This is too wide for my liking. So I will continue to monitor this and update. But there's a trade idea there for you if you like it. But for me, this is just not for me at the moment. Gold. Look at gold go. I've marked this line here earlier today because this will be a trigger for a long. I think if we can get above here, then we can call this the bottom. But as I've been saying, gold likes to make a low and then undercut that low before going. So I would just want to make sure, that's why the trigger for me is all the way up here. I don't want to take a long here and then have it pull back on me. I would much prefer to see it undercut at this low, and then I can long from there. So that's my plan for that. If you're wondering where I get this level from, if I go to the Heikin-Ashi candles, I haven't shown this technique before on the channel, so this is brand new. We have an inside bar pattern here on the Heikin-Ashi candles. What does that mean? It means this red bar here is the same color as this bar. They're both red, but all of the body of this candle fits inside all of the body of this candle. So what that means is we can trigger a long here on a break above this candle here, and that's where that level comes from. You can use this for tops as well. So you can say here we had a big bar, and then the next candle was, the entire body was inside the body of this candle, so a break below that level would be the trigger for the short, and you could see that would have worked fine. So that's where that level comes from. Like I say, my bias is that we will get an undercut of this low. The same is true for silver, of course. Maybe that's the low, maybe it isn't. Long above here would be one option, or I prefer to see an undercut of the low, and the same is true of the miners, of course. So that's all of that, looking to add, but being a little bit more patient for now. And these levels that I've got marked up are the same as well. So if you look at the Heikin-Ashi candles, you can see inside bar, and a break above that would yield a long. Bitcoin, this chart's kind of messy, but you can kind of see where I'm going with this, I think. I think any rally that occurs from here will likely fail and drop down into this 60-day cycle low, which is denoted by the green vertical line. I'm not really interested in any trades for Bitcoin until we can get down to this cycle low. And the same is true of Ethereum. That worked out really well last time. We got in here and out up here somewhere. So hopefully we can drop down into this cycle low, get along there, and see where we end up. So if you want to see how I deal with these markets in real time, make sure you are subscribed to the channel. Drop a like to help spread this video via the algorithm, and turn the notifications on to make sure you don't miss any of my positions as and when I execute them. Until next time, all the best from me. Take care. Cheers. Bye.
This one time, Bitcoin went from 6 cents all the way to 36 cents, and then it crashed down to 21 cents. And then another time, Bitcoin went from 85 cents all the way to $29, and then it crashed to $3. And then another time, Bitcoin went all the way to $213, and then it crashed all the way to $70. And then another time, Bitcoin went all the way to $1,100, and then it crashed all the way to $239. So the moral of the story is, don't buy Bitcoin, because you know it's going to crash again.